Welcome to the West Red Lake YouTube channel. Today I'm sitting with Gwen Preston. She's the VP of Investor Relations, and we're really excited to start to bring this series to you guys. We're going to be talking about the market. We're going to talk about some of the key team members within West Red Lake and what the market and the team means for the company itself as we look forward. And we're going to start to do this a couple times a month. And if you guys like it, we'll increase the frequency, but we want to keep you up to date with what we got going on in our day-to-day. And I feel like it's going to be a great way to add value to our community and kind of communicate some of the fun findings that we find because, keep in mind, the people that are involved in West Red Lake are really high caliber. And when it comes to investing and gold, I think I've learned more about where to put my money just by being in the office with these folks than school ever taught me, which might not be a stretch. But yeah. No, and you actually have an interesting background too, right? Because you started in journalism.
In chemistry and then journalism.
In chemistry.
To make it even weirder.
Yeah, so she started out in chemistry, then you're like, you know what? Chemistry is too easy to find a job. I'm going to go over to journalism.
Yeah, that was it. That's what led me there.
Make it a bit harder. And then you just kind of stumbled onto journalism and mining, right? And
Absolutely.
Then built a career off of that. And then for 10 years, you had your own newsletter with your own subscribers where you giving them tips on what you were looking at, investment opportunities that came about. So I bet that gave you a really good network of people over the past 10 years. And then that brought you over to being snatched up by West Red Lake, coming over to, as you say, the dark side.
It's a pretty bright dark side. So
it's a bright
very
dark
happy.
Side. Yeah, there are some darker sides to the industry, but this is
not one of
them. A nice bright one. Mm-hmm. So, no, it's great. It's great to see that transition. And I think it makes it unique in how you're approaching investor relations in the company. But what made you even start the newsletter? Why did you want to do that?
So there's a couple reasons. First of all, I started in a newspaper about mining. I learned a lot about mining and I fell in love with mining because mining is really, really interesting. It's this intricate network of science and analysis and economics and politics and people and economic growth and need. It pulls all of these things together in the most interesting way possible for someone like me, at least, who I like to think things through. I come from a family of scientists. So I loved it. I think mining is just a really, really interesting place to be. And then I live in Vancouver. And it turns out, as I learned, when I started in this industry longer ago than I want to admit, Vancouver is the heart of junior exploration in Canada. Yeah. So there are more junior exploration companies based out of Vancouver, exploring projects all over the world than there are anywhere else in the world. Yeah. So there's a huge business here in Vancouver. So I got to know a lot of the people. I got to understand the projects, the politics, the financing, how these things come together and succeed or fail in my time as a journalist. And then I got so entranced by it, and I came to a point where I realized we've been in a bear market for a long time. This was 2014, and I was like, this market's been terrible. I had been schooled at that point for 10 years already in how the market has its cycles. And I was like, I want to participate when the market goes again. So then in 2014, I launched my own newsletter. And for the next 10 years, I helped investors find opportunities in the gold space because that's what I was doing for myself. I wanted to be able to invest and buy, and it was an awesome ride, and I learned a huge amount, and I helped people make money, and then I found West Red Lake as an investment, and I really liked it for a bunch of reasons. What the asset was, all the sunk capital, but like you said at the beginning, the people who are driving this ship are amazing, very experienced, very driven, very focused,
very humble.
And very humble. Everyone works together really well. There's no really big heads here. And they needed someone to help tell the story. And it was a perfect coincidence of timing where I was ready to do something new, to apply my sort of knowledge to something new. And they needed someone in this position. So here I am, and I love it because gold is in this exciting moment. I think that there's a lot of potential ahead in the gold space. So really, a lot of things lined up, and I was very lucky.
No, that works out really well. And there's a saying I always love from Steve Jobs that says, you can't connect the dots looking forward, you can only connect it looking backwards.
Right? So true.
And it's like we always follow these weird paths, and it's when you go off of that well-worn path that you find cool opportunities. What were some of your like top picks or favorite companies when you were with Resource Maven?
There was a couple that worked out really well. There was some lithium. There was one or two lithium plays that I got the timing on really well, like Lithium X. It was a short-lived thing, but it worked really well for my subscribers. There was a few sort of quiet big successes. Like there was like one small gold producer in West Africa who sort of in very short order returned 400% for us, and then we sold, and it was just one of those realizing an undervalued situation and a new management team coming in and getting a story out to market. The flagship success, of course, was Great Bear and the Dixie Project. I was the first newsletter writer to cover that story, and with my subscribers, we wrote it literally from 29 cents to $29. So that one was a phenomenal ride, and so it's also really fun that West Red Lake, I'm now back in that same neighborhood. We're only 80 kilometers or so from that Dixie Project. Different rocks, different thing, but also some similarities, also some really interesting exploration potential where we are now based on what they figured out at Great Bear. So Great Bear was a big winner. And then I also I've always been a believer that uranium was going to have its day. So in the last sort of 18 months of my time as a newsletter writer, I positioned hard in uranium because I saw that the politics were all really starting to gel and that this pressure was coming to bear. And so, there was some great successes on the uranium front at the end of that period.
Yeah, having the combination of understanding the geology, but also knowing the markets, I think that's like where, because if there's a few components to having these runs, and one is, market sentiment. Are people looking at uranium? Are they looking to invest in these? Do they need these resources?
Yes. Is anybody going to care?
Is anybody going to care?
Yeah.
Or do we have way too much where it doesn't matter? The second thing is the actual geology. Can you, I was talking to an investor on the phone, and he was like, when are you going to turn these rocks into money? And that's one of the parts, right?
Kind of the thing, isn't it?
So you got the markets, you got the actual geology. How do you pull the rocks out? Is it something that's economical? Is it something that can work? And then the third part is the team and the people. And that's usually the hardest one because you don't see it from the outside. Like in venture investing in tech, the reason it's so important, like who you are as a person and the community around you, is because when you're that early stage, like I don't think there's anybody who invests earlier than VC tech. Like I got an idea.
Here's a check.
It's toned down, but they spend a lot of time looking at the people.
Yeah.
And it's hard to know the people if you're not actually meeting them in Vancouver or talking to them.
Yeah, for sure.
So those three components really come together to make unique opportunities. And it's hard to be good at understanding all three.
And I mean, it is. It's really hard to be good at understanding all three. It's interesting. I think a lot of times when there's advice given on speculative investing, like you say, VC investing in tech or junior mining investing, a lot of times people say it starts with the people. Make sure you believe in the people. But how do you actually research the people? I mean, you can look at their CV, but they're generally only going to list the success stories on there. Like 100%. You kind of have to be in the game to know the real story behind each person. Yeah. Or you have to be able to be in the game enough that you can ask other people, hey, do you know so-and-so? What do you think of so? I mean, when I was joining West Red Lake, I did exactly that. I asked a whole bunch of people in my network about the people on the team here to make sure that there weren't skeletons in the closet that I wasn't aware of. And I didn't find any. Instead, I just found a lot of support for the team that Shane Williams was building here, and certainly for Shane himself. So that's one of those things. That's as a newsletter writer, I loved to be able to share that insight with readers because I had the ability to find out about people. I wasn't going to go out there and spout out negative things when I found them, but I was able to say positive things with confidence when I knew that there were people that I really believed in.
Well, yeah, you don't need to shoot them down. You can just point at the good ones and leave it at that, right? Yeah. So that makes sense. Newsletter writing is a very hard business, though, especially in mining. Like, the part of the whole thing that we're doing here is like trying to expand the audience of people who look at mining companies.
Yeah.
Because what I find exciting about it and why I keep drawing parallels to VCs is I feel like it's the really one of the only industries in which any retail investor can get in at the ground floor. Tech, you can't. Like by the time you're buying, everybody's already made their money. They're selling. You know, they're not. When it goes public, that's when the rich people cash out. That's pretty much the VC game. But in mining, you have these venture exchanges, OTC, where you can get in before it even starts. So that's what makes it exciting to me is like anybody can buy.
It's true. It does. Absolutely. Anybody can get in. But just like with tech, in order, you have this, you have to have a lot of knowledge, right?
Yeah.
You have this long list of sort of junior exploration companies. How do you choose which of those has the best odds of making a discovery? It's a high risk game. The ones that make a discovery can do phenomenally well in your portfolio, but a lot of them actually don't make discoveries. And that's just the odds game of that interface of science and capital markets. What's cool though is that as you learn more about the gold space, you see that that isn't the only opportunity to make good money investing in sort of the metals and mining space. There's other points in the cycle that are also really exciting and maybe a little bit lower risk. So just like any arena of investing, it takes a lot of knowledge. So yeah, newsletter writers are a big help on that. It's a hard business because the audience, like you say, is reasonably small of people who are really inclined to metals. But we're going through a green transition. We're going through, a shifting a shifting world, to be honest.
Yeah.
So those two things together, the green transition and the shifting world, both of those really argue for metals in our future. We need a lot of metal to make the green transition happen, and the shifts that are happening in the world geopolitically and whatnot, and in markets, those argue for gold and silver, for precious metals. So I think the metals market is going to be an important thing over the next 10 years. I think it's going to be a really important thing. So anybody who sees that statement and agrees with that statement, it's worth learning a bit. There's definitely opportunities.
I feel like there are a few things where there's a large potential return on investment for learning.
Yeah.
There's not like before it was comp sci, computer science, you go in there and you would get like a ridiculously high paying job, amazing benefits. You didn't have any competition. Now I feel like there's a lot of competition. I have friends who go out and get their bachelor in comp sci and they have to go back for a master's because the bar has been raised.
Sure. Yeah.
Right. But with this space, because it's small, the very problem that we're talking about, is a really good opportunity when you do put in the time to learn, but you have to learn, right?
Exactly.
Now, the interesting thing that you mentioned is the timing. I couldn't agree more that I think that right now, the world, the economy, things are in a certain position that they've never been before. Never have we suddenly printed so much money in such a short period of time. Never has, hell, when was the last time Saudi Arabia didn't use US dollars for oil? Like there's so many things that have happened.
Yeah.
And even from the time that we went off the gold standard and just like the massive discrepancy that came up in the inflation and all like the 08, like there's so many things that have happened. But now is the time where it's like things are more shaky than they've ever been.
Yeah, so we are at a really interesting moment in the world, in global markets, in global economies, in global relations. It is incredibly interesting.
Yeah.
So like you said, we had the financial crisis back in 2009. We had COVID, and then we've had some geopolitical events more recently, and particularly the Russian invasion of Ukraine. Those things have had outsized effect. And so if we step back and put those things into like a really sort of big picture context, we've gone through several decades of globalization. Everything was about integrating. Let's pull ourselves closer together. Let's make lots of bridges. We are one world.
Yeah.
Then we had these crises, and crises often have insulating effects instead of network effects. And that's absolutely one thing that happened. Some of it intentional, some of it not intentional. But I mean, COVID absolutely, I think after the 2009 crisis and some of the other things that were fracturing in globalization, then COVID hit and just, it really put a stop to the movement to continue globalizing.
Yeah.
And it turned a boat that was already like stopped in the water, it kind of turned it around and it was like, there's problems with being a completely interconnected world. And there's some that are just like sort of apparent, like why are we, producing a fruit in one country, shipping it across the world to be like shelled and put into cans and then shipping it back again to be sold. Things like that don't make a lot of sense. But then then we had just the political differences.
Yeah.
And those rear up when you have things like COVID or just moments in time where economies are not as strong and we need a little bit more support internally for each country. And then tariffs come up and you put together fraying global tensions in terms of political outlooks. You put together these, economies that were just continuing along and you get a fracturing globalization. And then the politics pile on top of that. Russia invades Ukraine. And all of a sudden, these things that were fraying become chasms. Mm-hmm. And so we have a globalized world that is literally splitting apart right now. And that splitting is elevating gold. It's doing lots of other things. There's all kinds of outcomes from the splitting of a globalized world. But gold is undeniably a benefactor because, Saudi Arabia transacting for oil and gold. China is very clearly reducing its holding of US dollars and increasing its holdings of gold. These actions are very, very clear. They're even stated. Gold is the hedge, is the alternative to the US dollar and the US being the center of a globalized world.
Yeah.
That's just no longer the case. And as the world fractures apart, gold is the thing that is sort of bridging those gaps.
It's funny because currencies have a few properties, right? If for something to be money, you have to be able to transact, but it has to hold its value, right? And so when you look at what's happened with the US dollar, even Canadian dollar, it's like people are looking at these governments and they're like, oh, we don't really trust you as much anymore.
For sure.
And even the governments are looking at other governments and they're like, we don't trust you as much anymore either.
Yeah.
And that makes people be like, okay, so if we're not all one world, how do we protect ourselves? Mm-hmm. We turn to gold. And the funny thing is, like, I think that's what makes that kind of sometimes has the effect of making gold look boring because
it's like this safety net. Yeah,
right.
For sure.
But if you think about it, we're talking about trillions of dollars. Like this is a massive shift in how money is being moved and things are being valued. Mm-hmm. And so it's like, it's this safety net, but like it's a massive switch. There's tons of money that's going.
I mean, at the end of the day, there is a huge amount of value in safety.
Yeah.
People value safety. Yeah. I mean, you can come back to the pyramid of needs if you want to break it down to that level, or you can look at money flows, and they both point to the same conclusion, which is that there's a lot of value placed on safety and security. So take China as an example, right? China went through decades of unbelievable growth. And in those periods of unbelievable growth, there were all kinds of places for Chinese wealth to go that would generate nice returns and that were reasonably safe and secure at the same time because this was the growing machine. Now they're in the middle of a very real paradigm shift where that period of incredible growth is over. And so now Chinese wealth has to figure out, well, where do I go now? Those massive growth opportunities aren't there anymore. I still want growth, but I also want security. What I really want is to make sure that I don't lose wealth. Mm-hmm. And so there's the value in security and also the eye to upside. And guess what they're finding? I'm not saying that Chinese are turning to gold for the first time. The Chinese have long been gold investors. But the emphasis on gold has skyrocketed in the last 2 years because of this paradigm shift, because they need somewhere to put money that is safe and has upside. And the reason it has upside is just because of scale.
Yeah.
Think of the scale of Chinese wealth doing that shift. And it's not just China. It's a whole bunch of countries across Asia having the same sort of concept. That period of huge growth tapering down and needing to put money into safety and reasonable growth. But the irony in that is that the more people do it, the more upside there actually is for gold, especially when you then layer in that central banks are doing exactly the same thing.
Yeah.
Central banks are also changing where they're putting their money, where they're finding their security. They're shifting away from the US dollar and they're putting it into gold. The Chinese central bank has been buying gold hand over fist for 2 years. And so it's there for safety, but so many people need that safety right now that it's creating huge upside, right? So it's really an amazing hybrid.
And it's funny because it's also like inflation is, they say 3%. I was talking to a friend of mine the other day and he just, he's like, inflation's like 10%. And he said it very casually because it's like, that's how he feels. He's like, there's no way it's 3%. It's at least got to be 10%.
Right.
But the real effect that you can see is like, we're in Vancouver. Vancouver's like world renowned for insane real estate prices. And if you look at like houses in the States as well, they've been talking about how it's appreciated a lot. Still, you can buy a reasonable house in America. It's a possibility. It might not be anywhere that you like, but you can buy it. Yeah. And what's interesting with gold is that you actually need less gold to buy a house in the States, whereas you need about, I think, 10 to 20 times more dollars to buy a house in the States.
Yeah, if you look back sort of from 1960 until today, the amount of gold that you need to buy a house has fallen quite significantly, almost by half, whereas the number of dollars that you need has gone up, tenfold or more than. And that speaks to the staying power of gold, not just the staying power, but the increasing value of gold over time versus the depreciating value of dollar. Dollars keep becoming worth less, and that's just a reality. And so
because they keep printing more.
They keep printing more of them. And that's the other thing when we talk about huge changes over the last few years. I mean, the printing of money since the global crisis and then I would say redoubling, but really it was like a tripling or triple down on that game plan when COVID hit and just boom, print a huge amount of money. And so don't stop spending. Increase government spending, but don't increase taxes. None of it really works.
No.
And when will it all come to a head? No idea, right? People have been predicting the demise of the U.S. dollar or, a major U.S. debt fiasco for a long time. The voices keep getting louder. The numbers don't work. The can continue to be kicked in various ways. At some point, it won't be kicked anymore. I have no idea the timeline of that. But the presence of that risk is just more and more apparent to people. Like your friend who's like, inflation has got to be 10%. It's not 3%. I just don't believe that. And that's because groceries are so much more expensive. Rent is so much more expensive. Health insurance is so much more expensive. And so the reality of that risk, when inflation is like in people's faces like this, that's when people's heads start turning and they're like, but the dollars aren't worth as much.
It's just not.
So what do I do to try and protect myself if the dollars aren't worth as much? And gold has been an answer to that for such a long time. That it ends up becoming worth more and more and more and more over time because it's always the answer. Yeah.
And I think, this is where I feel like a lot of people bring up the gold versus Bitcoin debate. And I want to address it for a moment because I think that there's this idea that it's gold or Bitcoin, and I think that I almost see Bitcoin as a more speculative version of gold.
Yeah.
And I kind of see Bitcoin more as something that relates to like a mining company that's going to be producing gold because when uncertainty happens, it gives you a higher multiple, which is the same thing that would happen with a company that's mining gold. And we'll get into why that is. But the interesting thing is Bitcoin can go up, gold can go up. Mm-hmm. They can go up at the same time. They typically actually do. Mm-hmm. But the funny thing is the people with lots of money, like not millions, billions and trillions, they look at gold. And the reason is because that gives you the security. Mm-hmm. And so when we're getting all excited about this and we're talking about gold going up, maybe it goes up 2 times, maybe it goes up 3 times. It's not going to be 100x.
No.
Right? So that's not what's exciting for us. That's not what's got you working all day and then all night. And, it's for like a 2-bagger. The fun part about it comes from leverage, which is why I brought up Bitcoin, because Bitcoin essentially gives you leverage on economic uncertainty.
Yeah.
And gold gives you leverage, but there's something that gives you leverage on gold, right? And that's when we talk about these companies. Now, there are different kinds of mining companies, 3 groups, right? We have the explorers looking for discovery. We have the people who are, in between. They've found a discovery and they're not in production yet, and they're in that runway. And then we have the producers, and they're the ones with tons of cash.
Yeah.
Right? So how does that work? If I hold shares in a gold mining company, how does that give me leverage on the change in the price of gold? And let's just talk about the producers first.
For sure. Producers is the one where the math, where it's easy to explain leverage because it's just basic math. So a producer is a company that produces gold, has maybe 1 mine, could have a dozen mines, whatever it is. They have a cost. It costs them a certain amount to produce each ounce of gold. Say it costs them $1,400 to produce an ounce of gold, $1,400 US. When gold is selling for $2,000, that means they have a $600 margin. They're making $600 of profit on each ounce of gold that they produce. Great. Gold goes up to $2,400. So the increase in the price of gold has only been from $2,000 to $2,400. That's 8% increase in the price of gold. What has it done to the profit margin for the gold miner? Well, instead of having a $600 profit, they're now having a $1,000 profit. So their profit has increased 60%.
And then
that's leverage. That's gold is increasing this much, and the gold miner's profit is increasing this much. And that's the difference, because gold stocks trade based on their profitability, right? Stocks always trade. That's the reason that you own stocks, is because they should make money. And so when their profits rise dramatically more than the price of gold, that's what leverage is.
And so what matters then, I guess, is that if we go back to basic economics, you have the supply and demand curve. As demand goes up for gold, because things are getting more uncertain, and demand is going up like crazy, right? That means that you need more supply. And I wouldn't say that there's like a massive shortage in gold, but I would say that, when you have more people buying and you have the price going up, more people are going to be producing and selling.
Yeah, I mean, gold is an odd commodity, right? It doesn't trade like a commodity. Most commodities trade based on supply and demand, and supply being what is being produced now. And mostly that's primary production, and some of it's recycling. That's the usual commodity, is like that's supply, and then demand usually uses it up. It goes into a building and the copper goes into a building and it's going to be in that building for 40 years or however long it is. So it's usually like new production or recycled production being taken out of the market and made unavailable. Gold is a different beast. Gold is produced and then it continues to exist. How tradable it is just depends on who owns it. Is it this gold's unavailable? I'm not selling this gold. The Chinese central bank isn't selling its gold, it's buying gold. Other people do transact gold on a daily basis. So you can't really talk about gold as with supply and demand because they're very poorly defined. I mean, demand is well defined. We can see demand, but supply is very poorly defined. So there's primary production each year, and you can compare primary production to demand. And that's the only comparison you can make. There's a whole bunch more gold out there that some of it will become available as the price of gold increases because some people own it as an investment and will cash out on their investment appropriately whenever they want. But really, it's a much more complicated supply-demand setup than for any other commodity.
That's a good point, because I have a friend of mine who her grandmother started this business. I think it was like a shop. Don't remember what it was exactly, but anyways, she bought a bunch of gold way back, and like now he's in his mid-20s, and he's got like a safe with bars of gold. And it's been in his family for 2 generations just because they kept buying it.
They kept buying it, right?
And it's like, technically, that is available supply.
Exactly, but it isn't actually available supply.
But he's not going to sell it.
He's not going to sell it.
No, it's generational.
Unless there's a family decision to do something with it.
Then he'll do it. Okay, so we'll take a step back and we'll think about this from another perspective. If you're just looking at this and you see, okay, we're excited about gold, we know there's a shift that's happening in the world, and we know that there's a way to get leverage on it. What are the different ways that you can get leverage on the shift in the price of gold? And, we're obviously here because we have our own ideas of how to do that. But what are the options?
Yeah. So this was a question I used to answer all the time before I worked with West Red Lake. As a newsletter writer, I was very regularly, people would ask me like, look, I've recently realized the opportunity in gold. Teach me how to invest in gold. And I ended up rehearsing my answer a lot because I was asked the question a lot. Okay, so there's the explorers. Can be very enticing because if they make a discovery, oh my gosh, the returns can be phenomenal. 100 baggers, like 50 baggers. But the risk is very high.
Right.
The risk of failure is very high, right? So that's one category you can play in there, but that's a very speculative category. Then there's the developers who have a defined discovery and have done a lot of the grunt work to get that discovery ready to be built into a mine. And develop literally means, build it into a mine. That is, in my opinion, that's a pretty sweet spot because you get to go from spending money, which is what all of the studies and permitting and engineering and drilling and building are. You get to go from spending money to making money, which is what happens when you start producing gold. And these days you get paid a lot for an ounce of gold. So it works really well. So there's a re-rate in the stock that's really tangible because you are changing what the company is. You're not betting on maybe they'll have success. You're betting on now they're producing gold. So you get a tangible re-rate. So that's the developer re-rate. So that's one opportunity. You get good exposure to the price of gold, but you also get the re-rate in the stock as it turns a mine on. And then there's the producers. And the producers give you that really good exposure with leverage to the price of gold. They don't usually give you additional upside on top of that, like a developer does when they succeed in building a mine, but you don't really need to even pay attention to what they're doing, which is really nice for an investor who doesn't want to have to pay attention, who wants to buy exposure to gold and just have it be. So you buy some gold producers, maybe you buy an ETF of gold producers, and they will give you not just exposure to the price of gold, but exposure with leverage because of that profitability thing to the price of gold. So that's the lowest risk. The producers are the lowest risk. There's solid reasons. There's solid ways to have exposure to gold with leverage. Explorers are very, very risky, require a lot of knowledge, very speculative. Developers in the middle, they give you good reliability, but you do have to pay attention because some mine builds fail. But as long as the mine build works, then you get good exposure to the price of gold. They're all going to go up with the price of gold, but then the developers are also going to give you that re-rate as they become a real entity. So that I think is the sweet spot. The developers are the sweet spot for people who are willing to pay a bit of attention to what's going on in their gold portfolio, or you should go for the producers if you don't want to pay any attention and you just want to have some nice exposure to gold.
So the 3 levels of risk. Producers, do they stay in business? Like, do they mess everything up?
Is there some massive failure at an operation that puts them out of business?
Which is very, very low chance because they have tons of money. The second one is will they get to production? So they have found gold. They know how much there is. They've done
all the grunt work, all the studies, all the financing.
And now it's just a question of, will they actually be able to get it out of the ground?
Yeah. Do the people running the business have enough expertise to build the mine the right way?
Right.
To raise the money and build the mine the right way so that they can get the gold out of the ground.
Okay. And then the third one, the most risky, is do they have any gold?
Yeah, exactly.
It's like, we have this land. We think there is gold.
Yes, we have a theory about what the rocks did millions of years ago, and therefore we think there's gold.
And so we are going to drill a bunch of holes and then figure out where it is.
Exactly.
And so that's the biggest risk. Okay. So now, which one, you started out, you've played all 3.
Oh, I play all 3. And as a newsletter writer, I love explorers.
Yeah.
And maybe that's just the speculator in me. Maybe that's the scientist in me. Like if someone can give me a bunch of good layers of data that seem to create a strong argument for why there could be gold at that target in that moose pasture, that speaks to me. So I love that. And I've had some really phenomenal wins in the exploration world. So that motivates me to keep playing that game to some extent. But over 12 years as an investor in the mining space, and 10 years helping other people do it, I also had a lot of stocks where I thought the story was good and they didn't discover anything. And so that also has impact on you as an investor. And it actually demotivated me towards explorers to some extent. So now my requirement for their confidence, for their data, for their theory, for their approach is like, I just have a really high sort of requirement on explorers before I'm interested in playing that game. I still like it, but it's only with this much of my capital.
Yeah,
right?
yeah. That's the money that you put to risk, and you're like, you know what? If it wins, it wins. If it loses, it loses. I won't
exactly.
Die. And then the thing that's interesting though is that segment that you're talking about, where you go from maybe you're producing to you're producing. There are some people that we know decently well who have played that and gotten very, very wealthy. One of which is, of course, Frank Giustra, who is involved in West Red Lake and basically helped put together the whole company.
Yeah.
How did he play that? What was his story?
Yeah, so Frank is one of the most famous investors in mining. He's done phenomenally well. And Frank has done a few things repeatedly in his career. So they're the sort of trademarks of how Frank has created such success as an investor and financier in the space. He never plays exploration. I mean, maybe not never, but very rarely.
Not big enough to know about.
Yeah, exactly. All of his flagship investments have been advanced situations. So exploration was not something he was interested in. For those flagship things, they've always been about, there's been sort of two categories. One is about taking, call it distressed assets or assets in need of love. So these are maybe mines that were in production then got shut down, or like we're sort of just getting by, but he and others in the group, geologists or whatnot, realized potential for it to be more or better or bigger than it was. So going in and manifesting that, making that happen. So like putting operational and geologic expertise into a modest asset to make it into a great asset. So that's been one hallmark of his success. Using aggressive growth, so using one such asset, one mine that they turned into a good, reliable thing, to then buy other mines and grow aggressively. Frank has also done that because he recognizes that one of his big trademarks is recognizing that it's not just putting your first mine into production that creates a lot of re-rate in a stock, but it is production growth that generates a lot of re-rate in a stock. So production growth is arguably the most dramatic when you're going from zero to something, right? When you're starting at zero. So that's that first golden runway concept. Let's get our first mine into production. But if you go from being a 60,000 ounce producer and you buy or build a second mine that lifts your production profile to 200,000 ounces, that is a very dramatic growth as well. And so Frank has done a very good job of being aggressive, getting out there, buying assets because he understands the re-rate. And that re-rate is that the market gives higher multiples, higher valuations for scale. So the more ounces you produce, the more the market will pay for each ounce. That's how the valuation works. So his ability to get out there and create aggressive growth has been another huge hallmark of his success. And then he's had some clever new approaches to the mining business, like sort of in the royalty space, being one of the leaders in generating the royalty space. That's another segment of his success that's been very impressive and very successful. But on the mining side, it's really about understanding opportunity in individual assets, making those assets better, and then using them to create significant growth because he really realizes that the market pays more for bigger.
That's interesting. Yeah, so it's that he essentially took that re-rate that he saw the first time and was like, okay, let's do it again.
Yeah.
Do it again, do it again.
Let's do it again. Let's keep doing it. That worked well. Let's do it again.
And so he actually only plays in, there's a friend of mine that I know who does company turnarounds, but he does it for private companies and for like mom and pop shops. So he'll take over like a window cleaning business.
Okay.
And he'll, buy it and then change certain things and then it'll grow. And he says there's a few things that you can look at to see if there's an opportunity for growth. And one of which is you see, what is the chokehold? And he said you can always find out what the chokehold on the business is by talking to the people working in the day-to-day. because they will tell you exactly what is wrong. And so, for example, he says, is it a process? Like, do you have one printer printing these? Do you have one van that's going out and doing all these stops and you're just cheap and don't want to invest in a second? And that's what's really holding you back. And so that's like a process issue. The second one is just a management team issue. The family doesn't want to build the business anymore. They just want to ride it.
Yeah.
And the third one is that the product just sucks, and like, so product or service is bad. And that one is the one that you can't do anything about.
You can't fix that one. Yeah.
But the other two you can. And so what it sounds like with West Red Lake is it's like a similar concept. Distressed asset. Problem was with processes or team. And now there's a new team building new processes.
Yes.
And it's in that section where you guys aren't in production, but you're aiming for production, right? And it's going to be interesting to see how that pans out. And that's why we're going to continue to do these conversations as we go along.
Absolutely. I mean, that was a really good analogy. That's exactly why Frank was so excited to buy the Madsen mine, because he realized the team that, this group that went in and assessed the asset pinpointed exactly that, just like your friend does with companies that are hampered for growth. What went wrong here? Well, what went wrong was processes and upper management. So there was personnel and process things that went wrong. And just like in your story, this team went and talked to the people on the ground, the geologists, the people working the mill, the miners who were working underground, and they knew what needed to be done differently when this mine failed before. But they were disabled from doing that because of the team that was working above them, that was pulling the strings, so to speak. So just like with your friend, we figured out from these people what we needed to do. We said, okay, what do we need to do here? And honestly, the chief geologist pulled out the plan maps and was like, this is what you need to do. And we're like, all right then, that
makes sense.
So yeah, that's what Frank is so excited about, is that this is an asset where the fixes are possible. And that's the work that's happening right now. And that's why West Red Lake is pushing so hard. These fixes are underway, and we're so excited to get this mine turned on again next year to demonstrate that this asset that the market got really excited about, but then failed because some things weren't done well, can be that great thing again. We just need to reset and do it our way.
Yeah, and one comment I'll make just on that, just for context for people who haven't heard about the story before, is that this asset used to be a part of $1 billion company. Like, it was literally over $1 billion market cap, the same asset. And now West Red Lake is at 180, 200 million?
150 million?
150 million? Yeah. So again, it went into production and it fell out of production, got a re-rate in the opposite way.
Yeah, exactly. It went backwards on the golden runway.
Yeah. And then now there's a chance to get it back into production. And then also the team wants to grow it. Like you said, Frank likes to grow his producers. So it's going to be interesting to see. What are some of the things that you guys have done so far in terms of fixing the problems that existed?
So a bunch of things. So listening to the team on the ground, having true mine building expertise in that upper management, right? There's a lot of expertise that was on the ground. That expertise was not able to do what it needed to do because the upper management didn't have mine building expertise in the previous company that owned this mine. Our team has huge amount of mine building expertise. So that's a really key part of what's going on. So have the expertise, the experience in building mines, listen to the people on the ground. So work with the reality, not with the dream.
Yeah.
Right. And
I like that. Work with the reality, not with the dream.
Right. There was a dream previously of like building the next great Canadian gold mine, and Madsen can be the next great Canadian gold mine, but you got to do the work.
Yeah.
And you got to deal with the ore body that you have, not with one that you sketched on a presentation and pitched to investors. You have to deal with the one that you have. So it's really the diligence. You got to do the drilling. You got to model the resource. You got to know exactly where the gold is. You have to have really good mine engineering. You have to know what it is that you're going to do and how much it's going to cost. So you just have to do the work. You have to have experts doing the work. And that's what we're doing. That's like the short version of a long story is we have experts doing the work every day. And we know the jobs that need to be done, the projects that need to be assessed, the things that need to be changed. We're doing the work, and we're going to turn this mine on again next year, and this time it's going to work.
And so you guys are currently, like, you guys have done a bunch of drilling. You did a new model, have a new strategy for how you're getting the gold out.
Yes. The main thing is in the previous operator, they did not update their resource model enough.
Right.
So this is a really high-grade gold system. And in really high-grade gold systems, the gold is not continuous. It's not like there's a sheet of gold underground that's very high grade. There was maybe at one time a sheet of gold, and then the rocks got squished and bent and heated and cooled and squished and bent again.
Interesting.
And so the gold ended up not quite in this wide, but in more like this wide, and maybe broken up into segments. So if it was like this, then it ended up like this, and this, and this, and this. So you need to drill on very close centers. You need to have like 6-meter drilling on your entire underground resource so that you know exactly where each of those lenses is and exactly how the structure that's hosting those lenses is bent and folded. So they didn't do enough of that infill work and enough of the updating of the resource model to know where the gold was. And if you don't know where the gold is, then you're not going to mine the right rocks.
Right.
And then you're going to end up delivering rocks to your mill that don't have anywhere near as much gold in them as you thought. That's really what happened.
Yeah.
Near the end of their efforts, they started down the right path. They let the team on the ground do what needed to be done. They started to update the resource model in a very appropriate way, and they started to mine the gold where it was. And the last few months of production records were really good, but it was just too little too late, and the debt caught up with them, and it didn't work. So that's what we're doing. We're making sure we know where the gold is and how to mine it, and how much it's going to cost to mine it, so that we have confidence when we restart the mine.
How much money has been put into this before West Red Lake took it over?
$350 million.
$350 million was put into building the mine.
Yeah, exactly. And it's a brand new mill. It's a huge, beautiful
and it's $150 million market cap now.
Yeah.
And okay, and one other question. What was the deal that they got it for?
Pennies on the dollar. So if you think of $350 million that Pure Gold, the previous company, invested into the asset, West Red Lake came in and bought it for $6.5 million in cash, and a 1% NSR, which is an ongoing royalty on production, to the debt holder, and then a chunk of shares that also went to the debt holder. So altogether, those things were valued at about $30 million on an asset that, like we said, had $350 million spent.
Wow. Mm-hmm. $30 million.
Yeah.
That is, for an asset that had $350 million spent, and just a few years ago was a $1 billion company.
Yeah, exactly.
That is wild. Okay. Yeah.
So
I guess it pays to be in the right rooms.
It pays to be in the right. It pays to recognize opportunity. Mm-hmm. We weren't the only group that saw opportunity in Madsen. There were other companies that wanted to buy the Madsen mine. The thing, from what I understand of the process, and I don't know everybody who was bidding, I don't know all of it, but from what I know of the process, probably the reason that West Red Lake prevailed in buying the Madsen mine is that we offered the deal that we offered included a lot of stock.
Right.
So the company that had, the debt provider that had ended up owning the asset when Pure Gold went bankrupt, they liked the idea of getting shares in West Red Lake.
Isn't that interesting?
Because they saw the possibility, the potential for the expert group in West Red Lake, backed by Frank Justra, to make this mine work. And they wanted exposure to that. So they took less cash versus other cash offers that we understand were on the table. They took a smaller cash amount, but preferred to take shares for the potential to get more if and when we make good on our promise to turn Madsen into the mine that we think it can be.
Well, here's the funny part, though. These guys have put millions of dollars into this mine. Mm-hmm. So obviously they want a return. Mm-hmm. And so they're saying, okay, the best way that we can get our return is through more equity, which I find that a pretty good sign of confidence. I mean, like, the shareholders in West Red Lake are really cool because you've got Frank Justra, who he's not in for like a 10%.
No, he's in for multiples.
And he's also not in for like a few million.
No.
Right? So that's a good sign. Then you got these debt holders who also are in for getting a very substantial return. Mm-hmm. I mean, come on, like you don't put in that much money into a company to get like 10%.
No.
And so you got these folks in there. You got a really experienced team. It's very exciting. I mean, I'm really, really, really excited to be working with the company in general, and it's a great group of people. So anything before we wrap up for today, what are some of the things that you're focusing on for the next?
Really what I'm focusing on right now is that internally in our group, we're very close to having our mine restart plan like locked down. And that really matters because then we internally know what we're doing, when we're doing it, and how much gold it's going to produce. We won't be able to make those numbers public until they're part of a formal document called a pre-feasibility study. That has to be done by an independent group. So unfortunately, the timing of that coming out is months down the road. We'll be able to put that out hopefully by the end of the year. That's just the process that has to go through. But what we're excited about is knowing internally what we're doing and having confidence in those numbers so that then we can get out and just start talking to people with confidence about putting the mine back into production. And we won't say things that aren't public, but we can say that we're putting the mine back into production, and we can estimate what the scale of production will be. And that will hopefully get people to see that this is happening now. This isn't an arm wavy, the Madsen mine has potential. The Madsen mine could be great again at some point.
Yeah.
That's not the story anymore. The story is that the Madsen mine is going to be great, and it's going to be great next year. And just as soon as we sort of get this mine restart plan locked down and internally we know what the numbers are and we're confident in them and the board supports them, then we can get out and start marketing the story harder because there's a real opportunity out there, I think, for investors to get on board with a stock that right now is still perceived as taking longer to get to production and requiring more money to get to production than is actually the case. It's actually sooner and less than people realize.
That's probably one of the most common questions I get. Again, when do you turn the rocks into money, right?
Yeah.
And as soon as you're able to say that and be like, this time and this is how, I feel like there aren't really many companies that are going to be able to say that. And so it's just an exciting period. So that's good. That's good to hear that plan is coming into place very, very soon. And then, we always love legal, so we'll let them take their time.
The regulators are there to protect the market and protect the investor, and it makes it hard for us to market the story, but that's okay. That's the world. That's the world we live in.
And I really like that they take their time with things. They're not too rushed.
They're careful.
Which is good.
Okay, they're careful.
But and then we'll see how things go. But other than that, we'll circle back again in a couple of weeks, see where things are.
Absolutely.
See what else has gone crazy in the world. Then go from there.
Who knows? All right. Thanks.
Thank you.